Okay, good morning, guys. Welcome to the morning playbook. It is the 18th of August. I hope we're all well, doing well. I'm just going to run through, we'll just kick it off with intraday action that we're looking for. Let me just get those up. There we go. All right, let's see who's on. Just let me know if you can hear me okay. After all the problems we've just had with the sound, I'm pretty sure it's coming through good, so we'll get into it. All right, so intraday action we had overnight. US was a bit mixed, really. It had, Jason, we had the Dow was down, S&P was supported by the tech stocks, and the Nasdaq actually gapped up and was quite strong for the session, considering. So it's the US continues to be a tech play. There's a lot of I think they had some good earnings on one of the tech stocks. I can't remember what the code is, but that was up about 6-7%, and it dragged, created some more positivity in the tech sector, which dragged obviously the Nasdaq higher and the S&P by default, but the Dow wasn't as happy as the others. So you could see, just that tech rally bubble, whatever you want to call it, continues. It's probably just the US government buying up the ETS on the tech stocks just to keep the bullish market continuing. So we'll just go over the intraday action that we're looking at today. Now, this is the N225, the Nikkei. That little pop up there was looking okay until it had news flow come out and it smashed down. We had a short that didn't really go anywhere. Expected that to continue on, which it did have another retest later on. Just didn't go anywhere, and you can see it pretty much flatlined after that up until 6 a.m. close. Was it 6 a.m. close? Yep. So it did nothing. It'd be interesting to see if this level holds up, 23,185. I expected that news that weighed on the market a bit. So you sort of got local news or local data weighing on the Nikkei, but then you've got the overall market is still risk on into equities at this stage, and nothing seems to want to change too much. Obviously, there's with Dow being down and our market sort of chopping around a bit as well. You can see, there is still a lot of chop, and you got the US dollar was weakening again last night, which leads, if that's going down, we're sort of talking up more stimulus expectations that stimulus is going to come through sooner or later, and that's going to be bullish for the market, and we'll just keep the party going. Obviously, we've got, I think the main focus now is the elections as that kicks up a gear. I think it's Biden's going to be on the promotion track soon, so I think that's going to kick into again. That's what I suspect, that the markets are sort of waiting to see how it goes. Whether there's going to be a Wall Street supportive Trump win, or if a win from Biden, how's that going to affect the overall markets? You still have virus concerns, as I think Italy, the cases are growing, Europe cases are growing, Australia cases are growing, US cases are growing, yet the market is not really concerned about that just at this stage. It's still, the news could talk it up all they want, but the markets are still, going higher. You expect, I would personally expect not to be so risk on coming into, with that sort of weight on the market, the fundamental weight on the market and the elections, but it is still, if you go and we'll look at the Nasdaq chart in a second, it is bullish, and the same with US and S&P. S&P is right at all-time highs. Dow's creeping up. It looks like it's potentially set to break, and the Nasdaq just pushed into new all-time highs yesterday. So it is, definitely a risk-on environment at the moment, which is not changing. So even though there's a massive disconnect, it's still, buying some good, solid technical setups on your stocks, and we'll just trade the indices accordingly, from day to day. So that, like I was saying, the Nikkei could be weighted down at that 23,185 zone. We'll just have to see how that goes. It might be, it's just opened 9:30, and it's not really doing anything at this stage. If it starts to head down, we get that lower high to work into. I'd rather see that break 2308, and if it retests from below and we get the lower high, we'll get a sell. If it does the same thing yesterday, pushes into its own stalls, then we know it's probably going to be contained between those two levels at this stage. The Dow moved down. It's just bouncing up off this level 27,830 at this stage. We might get a bit of a push up. It's got well and truly, some solid resistance at 28,005. If we can get a lower high come into play, we might see if it can grind down through 27,830 coming to the European Open. Hang Seng, we'll have to wait and see how that opens, but the trend is up off 24,255, and it's looking like it's ready to go through, up and through potentially 25,727. Now with extra stimulus, which they came out yesterday from China, from the government, that should be supportive. You would expect continue support today and continue that move up from yesterday. We just want to see how it opens. See if we get a flush lower, it holds a higher low, and then we can get a bit of a rally, or whether it's going to go straight off the bat and rally into that zone, 25,727. So 11:15 is the key time for that. And the SPY, it did push down in the open, but the day's session close was somewhere around here, down at the support zone 60.15. So we've got the market's pushed up off that zone right through the European session and was buoyed into US session. Now it's just hovering above 60.44. So I don't want to see that level break. Don't mind if it's flushed out on the open and we bounce before the market, the 10 o'clock open begins, and that, say 12 past 10, the market, the ASX is fully open. See where the SPY's at there. There has been a few sessions where you expect a stronger open. It's open quite weak and then bounce back. So it'd be interesting to see whether it can actually flush out and then we hold the higher level and we push up through 60.56. I think it's supported by a weaker US dollar and commodity prices at this stage. Let's get on to, so this is dollar index. This is a daily chart, and this is the level. It's down on that support zone. Even though the market's, the weaker dollar is just edging down, it is pushing down onto that support. It's supporting the market. That weaker US dollar supported gold. Gold smacked high last night. Commodity prices, currencies, all that sort of thing. But it is just grinding down. There is no change on the stimulus front at this stage. So I don't expect it to plow through that, because you take out that level significantly, you're going to get smashed down to 88. Now that's a big move, and that means the party continues. Probably in a massive move up in gold, you're going to see currencies react. It's probably going to be bullish for our market too, with commodity prices, all that sort of stuff. So I don't see why, if stimulus hasn't come through, why it would break down there. So I would find 92.50 on the downside, even sort of capped around where we are at the moment. Just look at the 30-minute zone, 30-minute time frame. You've got longer term, we've got that resistance up here. So it's going to be, I would expect it's going to be supported down at 92.50 or thereabouts, and then it's going to be trapped, holding below that 93.90, 94 area on the US dollar, which means that I don't see anything until stimulus comes out, and that's why I don't mind. So I'm expecting that Trump's playing a bit of a waiting game, just to make sure. I mean, if he comes out, if he doesn't want stimulus, why would he announce? You got to think about, because why would he announce no stimulus if that's what he's working on? Because I wouldn't expect that's going to be too good for markets. No more stimulus probably means that's it. No more kicking the can down the road, and equities might drop because they're sort of being buoyed on stimulus. If that's it, longer term, and that's what we're looking to support this market, and it's not going to come, you would expect the US dollar to change to a bit of a short squeeze on that. You would expect the currencies to move. You would expect the equity markets to run into a bit of resistance, massive resistance, and even find a good sell-off. So I wouldn't expect that he's going to risk that come into elections either. So that's why I still think he's going to be delaying on any stimulus. If he doesn't want to, if he doesn't want any more stimulus because he wants people to get back to work, he's going to be working on that, as opposed to giving away more free money and meaning that people are going to stay home because they're getting paid to do nothing, and so on. So yeah, we'll see how that plays out. Now you see the pound was a funny one, chopping around here. Look at that, swinging, took out the highs, took out the lows, took out the highs again nearly, took out the lows, chopped around. It was just an absolute mess last night on the pound, whereas the euro was buoyed, pushing highs. The US dollar pushed down. We're looking to these resistance zone around the 119 mark. I would expect that to be capped, because I don't expect the US dollar to get sold off harder. So I would expect there's going to be some sort of reaction up here from sellers. The yen missed a nice little short on that. Pretty much in this zone, it kicked off around 7 o'clock at night. That moved down. You're looking for the secondary move down. If you probably measure that, it's roughly the same. Yep, into that support. So that, not so much support here, but into these lows. There's a measured move down. You can see that lower high starting to play out. All the MAs rolling over, and once you get on the right side of the MAs, and you've got a little setup, a shoulder trade, which is basically straight here. That was a prime entry short for me. just didn't have the opportunity to take it, to be honest. So we just want to see if that can hold around here and what happens if we're going to see some reaction higher from buyers, which would probably suggest we're going to get a bounce in the US dollar. But again, for this to move down, I would see more weakness in the US dollar, but I just don't see that playing out in this near term. I want to go over to, let's just go over to, just go the flow here. NASDAQ, you can see, still heading high, supported at, well, 11,111 thereabouts, but that support just here, 11,100. So that's the anchor to the leg up. We're just in new all-time high. I think it closed up in new all-time highs. The gap up there, for whatever reason, quite strong. Now reporting's coming to an end. Don't forget, I think the end of the week in the US with retailers, some of the big retailers are reporting this week, and that was probably the end of it. So I'd be struggling to see any reason why it could just kick off. Maybe everyone's looking NASDAQ to continue higher if the lockdown continues. I don't think the US want to go into lockdown. It's all these different forces pulling on that NASDAQ. So if that continues higher, expect the US to continue higher, the S&P to go into new highs, the Dow to be dragged up into new highs as well. So we look at the Dow now. That sort of contraction back to the MAs, to me, that flag, pennant, whatever you want to call it, set to break up. So that's, and just continue that longer term momentum up. You're having these false starts, you're getting these breaking the trend down, and then it kicks off again. So it's kind of a tough one to, it's flushing people out and going, flushing people out and going. And we've broken through this high previously. So we might continue down just to drag and retest this level before we pop up to the all-time highs or towards that 30,000 mark. But at this stage, the trend is still up, NASDAQ's still up, NASDAQ's supporting the overall market, and the S&P, the S&P, I think I've got this mark up as the all-time high, roughly around that 33.90 zone, and we're right there now. Don't expect that to not be broken in the near term. Just over to commodities, we'll finish up on those. This is gold. There was an entry late in the session, probably coincided just coming to the US session, popped up. We get that support coming in around 1932. Supported gold. We've got that sort of grind lower supported. We have a higher level, popped up to an extended move up. So if you take it from low to high with this bounce, then we got that consolidation. That move up continued to this zone around 1992. So if we sort of consolidate around here and hold, there might be another break up. We might be looking back up to retest those highs at 2072 and higher even. But at this stage, that's your first leg up, your secondary leg up. It's getting a bit stressed up here. You can see momentum easing off there. So we might get a bit of back and fill. It's just how that happens. If momentum comes back to sort of that zero line, so the way I look at it for MACD, pulls back to the zero line, starts to look like it's going to go, and we're holding a higher level, okay, it's a buying opportunity into gold. But we'll just see what happens there. Oil, supported by Chinese stimulus and expectations for more demand, ticked off. We're looking at these highs at 43.50 at this stage. Took out all these previous highs from back in August, 11th of August, and then later on about the 13th of August, from highs from last week really. Took out those highs, popped up. And like I said, we're just looking at, I would say that that's going to be targeted in the near term, probably today into the European session. Might get a pop up to that 43.50 zone, and we'll just have to see how it reacts up there. Wouldn't expect with everything that's going on that we're going to get a break up and through and just continue on up. But you never know. You never know. And it's funny, you get this sell-off here, sucker in a few shorts, and then bang, it just jammed and straight back out again on the open of the US session. So, a few traps have been laid lately, a lot, and they're getting set out of hours, and they're coming into the US session, they're getting, people are getting trapped on the wrong side of the market and squeezed back out. It's happening a lot. So this market is kind of whippy, is choppy, and it's, just got to be careful in it at the moment. And we look at copper. Copper did rally, and the copper, like we were speaking about yesterday, sell off, bounce straight back. So there's no commitment from the sellers, and there's also no real commitment from buyers, through this zone up here. We're just heading back straight back into this chop back up here. And that's probably, again, everything's just sitting around waiting for some further direction on the US dollar and stimulus either way. And I think there's the US Fed Reserve minutes is out on Wednesday, so there'll be a lot of people looking, or the US dollar will be looking and focused on that to see if they're going to say put some sort of inflation plan into place, meaning they want it back above 2%, 2 to 3%. See if they can, I don't know what they're going to do, but if there's going to be a change in tone from the Fed, that's going to affect the US dollar, and that could be a bit of a driving force for some moves. All right, we'll knock it on the head there, guys. N225 is open, Bobby, at 9:30. So that is just starting to come down to that 2308 zone. And the SPY, look at that. So we're going to sucker in a bit of a washout of that support, see if we get some sellers come in, and see if we can lift. Otherwise, the SPY a lot will look like a sell-off and then turn around and bounce and whip everyone straight back out, straight back to the highs. Look at this move here, looking like it was breaking down. This is yesterday's action. Lower high, pressuring up at this zone, down into support, lower high into support, broke support, bang, straight back and just cleaned out anyone that's been selling in there, cleaned it out, straight back down to anyone that was sort of buying in here looking for that break. Look at that trap, took out the highs, looked like bullish move, straight back down again. So it's a bit of a washy mess at the moment. The SPY, it's still, everyone's just waiting for some sort of direction out of the US and the US dollar and stimulus. You're not up at these levels. It's struggled to commit to more risk into the market. I think everyone is starting to struggle to commit to longer term risk on. Or further risk on, especially in the US as it approaches all-time highs with the disconnect between the fundamentals and the prices. So it's easy to whip people out. You can flush them out, everyone jumps in short and turn around and squeeze them straight back out again. So it's just the fuel, all right, for these moves. All right, we'll call it a day there, guys. Thank you very much for joining me. Back in tomorrow at 9:40, thereabouts. Any questions, feel free to send us an email to support@tradesetup.com.au. And excuse me, just remember to leave us a like on the YouTube channel and subscribe if you haven't already. Help us spread the word. Thanks, guys. We'll speak to you again soon.